If you're a crypto whale or a founder of a crypto project and you need liquidity, I have a solution. I've built a relationship with a family office that facilitates large-scale crypto loans. They will issue up to 85% LTV loans on projects in the top 1,000. The minimum loan size is $1 million and the maximum loan size is $200 million. Now in this video, I'm going to break down the terms, the process, and I'll show you proof that I've been paid brokering these loans. So let's dive into it. All right, the family office issues 70 to 85% LTV loans on Bitcoin and other altcoins in the top 1,000, as long as those coins are traded on a major centralized exchange like Binance, KuCoin, Kraken, etc. And if you wanted to use USDT as collateral, the family office will issue a 90% LTV loan. So now that you know the different types of collateral that can be used, let's talk about the fees on the gross loan. There's a 4% family office fee, a 2.25% annual coupon, and a 5% origination fee. There's no early repayment for 18 to 24 months, and the max loan term is 36 months. Now, keep in mind, this is a non-recourse loan, meaning that if your loan defaults, the family office will never ask for a repayment of the loan, and the family office is not required to report a default, which may or may not create a very favorable tax situation for you. Here's what the principal and signatory at the family office has to say. The loan product is geared towards institutional players, but at the same time, being a whale in a project puts you into the field of an institution. Where else can you get a loan against your Bitcoin or alts for under 5.5% annually? And he raises a great question, because if you look at other lending platforms, most of them have significantly higher rates and they don't take as many forms of collateral. Now, you may be wondering, why is a family office willing to offer up to 85% LTV loans on volatile assets? Is there a possibility that they could lose money? The answer is no. The family office makes profit in the event of a default or in the event of a repayment. I'll try to give you a very simple explanation. So the family office works with multiple major exchanges, and they have a big chunk of equity in an exchange that you most definitely have heard of. Prior to executing a loan, the family office negotiates a sale price of the coins to the exchange in the event a loan defaults. This means the family office makes profit if the loan defaults, and exchanges are willing to pay a premium because they have the ability to manipulate price. Now, if a loan does not default, and let's say you as the borrower pays back the loan at the end of the term, you get your coins back and the family office pockets the fees and interest. The family office also mitigates risk by making sure that coins are sent to a joint wallet that takes 2 signatures to move the coins. This way, if an exchange goes insolvent, like what we saw happen with FTX, the family office wouldn't be at risk of losing that collateral. So now that you understand the terms and a bit of the technicals, let's talk through the process. Step 1, we establish communication. Most people who are involved in crypto use Telegram, so normally we create a group chat on Telegram. It will be me, you as a client, and the principal at the family office in that group chat. Step 2, we have a group call. On this call, you'll learn more about the family office and you'll get all of your questions answered. Step 3, you as the borrower fills out some basic KYC docs. The family office runs background checks on all potential clients to make sure people aren't linked to a terrorist organization or other problematic things like that. Step 4, the loan agreement is signed by both parties. And step 5, the transaction begins. Now, it's important to keep in mind that the family office does not use an escrow account or involve any third parties in the transaction. You as a client will be instructed to send coins to a specific wallet first, and once the transaction is confirmed, the family office will send back USDT or USDC or even fiat to your bank account if that was agreed upon. Because this is a new relationship and a client has to send coins first, the family office will establish a tranching schedule to minimize what they deem as fidelity risk. For example, if you wanted to put up 100 Bitcoin as collateral, the family office would most likely set up a tranching schedule that looks something like this. Tranche 1, 5 Bitcoin. Tranche 2, 10 Bitcoin. Tranche 3, 20 Bitcoin. Tranche 4, 30 Bitcoin. And Tranche 5, 35 Bitcoin. So at this point, I've covered the terms and technicals, I've covered the process, and the last thing I wanted to show you is proof that I've been paid brokering these loans. Here's my Coinbase account, and as you can see, I've received quite a bit of USDT lately. 180,000, 113,000, 85,000, 42,000, 29,000, and 14,000. These were commissions I made per tranche on a large loan. So like I said at the beginning of this video, if you're a whale or a founder and you have a need for liquidity, this is a great solution. One of my recent clients was an early investor in Bitcoin and Ethereum, and he's also a founder of a top 100 project. He took a loan against some of his holdings so he could invest in other projects that could produce a higher ROI than if he solely had exposure to those crypto assets alone. And you may be in a similar situation where you're incurring opportunity costs. Now, if you're interested in getting a loan, what you should do is head down to the description below. You will see a link to my site where you can fill out a simple application. This application will give me context on your exact need, and once I review your application, I'll reach out to you and we'll get this process started. So that's about it for this video. I hope that you enjoyed it, and I'm sure that I'll see you in the next one.